For the company background of Dialog Group Berhad, Dialog Group Berhad is a public limited liability company incorporated and domiciled in Malaysia and is listed on the main market of Bursa Malaysia, Security Berhad. The Dialog Group Berhad is Malaysia's largest provider of comprehensive technical service to the oil, gas and petrochemical industry. Tan Sri Dr. Ngau Boon Kit, the company executive chairman, created in 1984 after more than 45 years of important expertise in the oil, gas and petrochemical industry. Under his leadership, Dialog distinguished itself from the majority Malaysia publicly traded oil and gas businesses by remaining extremely profitable and maintaining a solid balance sheet despite significantly volatility in crude oil price.
Okay, Assalamualaikum. My name is Muhammad Nakib bin Karuddin and I will be presenting on the liquidity ratio of Dialog Group Berhad. So for the first one is current ratio. The performance of Dialog Group Berhad in the year 2020 is better since the company has RM1.70 of current assets for every RM1 to repay its current liabilities compared in the year 2019, which the company has only RM1.50 of current assets for every RM1 in current liabilities. So secondly is the quick ratio. In 2020, Dialog Group Berhad has better ability to pay its short-term obligations because the company has RM1.60 in quick assets for every RM1 in current debt compared in year 2019, which is RM1.40 in quick assets for every RM1 in current debt. So the third one is cash ratio. Dialog Group Berhad has better performance in generating cash in the year of 2020 when the company has 80 cents in cash to cover all current liabilities immediately without having to sell or liquidate other assets, whereas only 60 cents in year 2019.
Assalamualaikum, my name is Ahmad Faris bin Abdul Nasir and I will present to you the activities or known as efficiency ratio. There are 5 efficiency ratio, which is inventory turnover. In 2020, Dialog Group Berhad slightly used its inventory to generate sales effectively when the company has recorded 21 times in inventory turnover compared to 2019, which is 20 times. For average collection period, the performance of Dialog Group Berhad in 2020 is slightly better when the company has received cash in 103 days after making credit sales compared to the year 2019, which is 142 days. Next is total asset turnover. Dialog Group Berhad has slightly used all its assets effectively in 2019 when the company recorded 0.36 times in total assets turnover, compared in 2020, which is only 0.32 times. For the fixed asset turnover, in 2019, Dialog Group has slightly better at utilizing its plant and equipment when the company has 0.53 times in fixed asset turnover compared in year 2020, which is 0.49 times. Last but not least, the Dialog Group Berhad has done slightly more efficient in collecting its credit sales in 2019 when the company has collected its receivables in 2.6 times compared in 2020, which is 3.6 times.
So for leverage ratios, for the year 2020, as in for debt ratio, based on calculation, we have attained the amount of 40.98%, as compared to the year 2019, which is 41.76%. So Dialog Group Berhad used 41.76% of its total asset represented by debt in year 2019 compared to 40.98% in year 2020 that had a lower debt ratio. In year 2019, Dialog Group Berhad experienced higher risk since it uses more debt financing to finance its total asset. So for debt to equity ratio, based on calculation, we attain the amount of 69.4% for the year 2020 and 71.7% for the year 2019. So in 2019, Dialog Group Berhad is taking 71.7% of debt as a means of leveraging its asset compared to 2020, which is 69.4%. So this shows that Group Berhad has better performance in 2020 because the company has been less aggressive in financing its growth with debt. So as in for time interest earn ratio, based on calculation, we have attained 14.7 times in the year 2020 and 14.2 times in the year 2019. So the capacity for Dialog Group Berhad in year 2020 to serve additional interest is higher with 14.7 times as rather than in year 2019, which is 14.2 times only.
For the profitability ratio of Dialog Group Berhad, for the gross profit margin, in 2020, the performance of Dialog Group Berhad is slightly better when the company had achieved the high margin, which is 22.4% compared to in 2019, which is only 21%. That indicate the ability of Dialog Group Berhad in controlling of cost of goods sold relative to sale revenue and the relative contribution margin from sale. For the operation margin, in 2020, the Dialog Group Berhad had a better productivity of asset in providing return to the both creditor and stockholder when company had achieved 34.8% compared to 2019, which is 39.4%. For net profit margin, the Dialog Group Berhad profitability ratio for the year 2030 is higher than 2019, which is 28.40% as compared to 23.40% of net generated income. Net income generated as a revenue or profit after deducting all expenses, including interest and tax. For the return on asset for Dialog Group Berhad in 2020 is higher than in year 2019. This can be seen the ratio where in 2020 recorded 9.01% compared to 2019 of 8.23%. From the ratio, it shows that the return on asset in year 2019 is less efficient in generating return on asset investment compared to 2020. For the last is return on equity. The Dialog Group Berhad has better performance in using 15.27% of its shareholder equity to generate profit in year 2020 as compared to the year 2019, which is 14.13% investment return rate.
Okay, moving on to analysis and recommendation. So for liquidity ratio, the liquidity refers to how fast the company assets are converted into cash. Liquidity ratios generally focus on cash flows, and it is the capacity of the company to meet its short-term responsibilities. The effective use of assets result in liquidity management. So the liquidity ratio for Dialog Group Berhad, it shows that the company has a better performance in the year 2020 than the previous year 2019. Dialog Group Berhad is also able to meet their short-term obligations using its assets and after deducting inventories. In terms of cash, the company is unable to pay its current liabilities. Okay, so moving on to recommendations. The first recommendation for liquidity ratio is to remove unproductive assets. Unproductive assets are assets that do not generate money and only waste companies' resources. So it is better to sell them and get a good price for the unproductive assets. However, when assets do not worth anything, it is better to just get rid of them for what they are worth. Uh, because the sole purpose to invest in assets like buildings, equipments, and cars, for example, is to generate revenue. Following the sale of the unproductive asset, a company's cash balances would increase and they would not have to account for the depreciation as well as the company's ratios would also improve. So for the second recommendation is account receivables should be regularly checked to ensure that customers are charged correctly and payments are received on schedule. Furthermore, in order to keep money for as long as possible, the company can negotiate with their vendors for longer payment periods. Other than that, keeping track of how much money is being taken out of the companies for non-business users like owners' withdrawals is also recommended. This is because taking too much money out of the firm can cause a cash flow problem.
Analysis for efficiency, or also known as activities ratio, are used to evaluate a company's overall efficiency. Activities ratios enable companies to see how well their assets are managed and whether they can generate income from those assets. The efficiency ratio for Dialog Group Berhad has slightly improved in 2020 when compared to the efficiency ratio in 2019. It indicates that the company has uses its assets and inventory efficiently to generate more revenue. The collecting period has significantly improved too. The same goes for their fixed asset and the collecting their credit sales. Move on from that, recommendations for activity ratio is the first one is increase sales. There are ways to increase sales, which one of them is increasing the price of the products and services. However, there is a limit to what the market can sustain, since the company is decided by whether a person is willing to purchase or consume it. And another alternative is to boost Dialog Group Berhad sales, which is to provide an efficient service to the customers. Since time is valuable, which means it could cost a company if they do not serve their customers quickly. Next recommendation is improving efficiency. There are better ways that Dialog Group Berhad can use its assets, which is by measuring machine output and determine whether it can be increased without having to increase the labor costs. Retraining a machine operator or establishing quotas can assist the company in accomplishing this. Thank you.
So, for the analysis of leverage ratio, a leverage ratio is one of the financial ratio that compares the amount of debt incurred by a company to the other accounts on its balance sheet, income statement or cash flow statement. This ratio shows how the company's assets and business operations are financed by debt or equity. So that the leverage ratio for the company Dialog Group Berhad in year 2020 is that it has improved slightly compared to year 2019, on which the company borrows to finance their assets and business operation. So as in for recommendations, the first recommendation that Dialog Group Berhad should do is developing an effective inventory management to reduce the debt to capital ratio. Inventory can consume a significant portion of a company's working capital. Keeping inventory levels above what is required to fill customers' orders in a timely manner is a waste of cash flow. To determine how efficiently inventory is managed, businesses can look at days sales of inventory, or DSI ratio, which is part of the cash conversion cycle, or CCC. So another way for Dialog Group Berhad may reduce the debt to capital ratio is to restructuring their debt. If a company is paying relatively high interest rates on its loans and current interest rates are significantly lower, the company may be able to refinance its existing debt. This reduces both interest expenses and monthly payments, improving the company's bottom line profitability and cash flow, while also increasing its capital reserve. This is a common and simple method for negotiating better terms for the company and its outflows, as according to Maverick 2021.
So the profitability ratio on analysis. Profitability ratio are financial ratio that measure the financial health of the company, which means that it measure the ability of the company to utilize its asset and manage their expenses in order to generate an adequate rate of return. It is important to consider the amount of profit figure relevant to the size of business. The profitability ratio for the Dialog Group Berhad for the year 2019 was worse than it was for the year 2020, which the company had slightly improved in generating profit. For the recommendation on profitability ratio, the first recommendation is reduce direct costs. The Dialog Group Berhad should reduce all of its direct costs because it will significantly increase gross margin. By negotiating better price or discount on everything the company purchases is one way to reduce its direct expenditure. Aside from that, the company must be adept at location the best price, assuming that the quality is comparable, because this may necessitate the discovery of new sources. Other than that, reducing direct expenditure is to ensure that the company does not purchase unnecessary items that the company does not require. A true examination of the company's direct expenses should be revealed any areas where it has overspent. In addition, controlling the inventory stock is an excellent strategy for improving cash flow and streamlining the organization. With less money invested in slow-moving goods and fewer inventory losses as a result of expiring or discontinuation. By ordering more frequently, Dialog Group Berhad had compare prices and take advantage of seasonal sales or overstock reduction.
In summary, financial statement knowledge and financial statement analysis skills are desirable in order to make the best financial judgments that can influence a company's future actions and direction. Financial analysis is also useful for examining a company's financial situation as well as performance. As a result of this study, Dialog Group Berhad can determine whether the company's financial status is adequate or unsatisfactory. If the situation is deemed to be unsatisfactory, Dialog Group Berhad can respond immediately to prevent the problem from worsening. Moreover, this will also help boost employee confidence that their employment is still secure, as well as provide several other benefits to the organization. Furthermore, the success of any firm organization is closely linked to the skill of business management. As a result, the company can devise fresh strategies for dealing with new and changing market success circumstances. Thank you.